in the infancy. In the fintechs and the conventional banking, still also in the infancy, but they're ahead of the Islamic finance. But actually, we see amazing organizations like microfinance. I would say IRADA in Sudan, where the Islamic Development Bank worked with Bank al-Khartoum, and they established a microfinance IRADA, which is a very, very successful organization. We established a career impact bond. My organization, Pal Siraj, with Al-Quds University in Jerusalem, and we were able to actually sponsor students, but we actually get those students to, if we had an impact on them and they got employment, they actually return the payments. And we have a lot of these little initiatives, but nothing really large and horizontal across the Islamic world. This is basically what I have to say on the introduction, and I'm looking forward for the follow-ups.
This is amazing insight, Brother Khatib, and I think, as I mentioned, that every other forum that I see, you're not only getting younger, but your your points and your content is getting even and even revealing and even very insightful, at least for myself. And thank you very much for this very keen insight and the information that you've shared. The viewpoint resonates very, very well, and I think it gels well from what has already been submitted from the first speech till what Dr. Dar has said, and you've tried to answer the question in a very effective manner. And this brings me, the 2 or 3 points that you've mentioned is the fact that, that the Muslim populations, or even the world at large, is right now struggling with unemployment of the levels that were hardly seen before. And on top of it, particularly the Islamic countries are awash with predominant youth population and an unemployed youth population on top of this. This is serious. Having youth is good, but having unemployed youth is a bane for any nation. And not only that, particularly in the COVID scenario, not only the unemployed youth is an oversupply of labor that is waiting to be met with a relevant demand in the economic sector, but also there is a new supply of labor that has come very, very fresh. The first time, where, for example, I give you an example of Pakistan, for example, in this COVID scenario, a number of Pakistanis who were working outside Pakistan, because of this economic slump and the economic dent that the world has received, their jobs are cut now. And most of them have no other option, particularly at a certain level of dimension of these labor supply, have no other option but to return back to their countries and with families in some cases. So the government in Pakistan, I'm just using Pakistan as an example, is not only facing an issue with its own economic woes, but it is facing with an issue of an unemployed predominant youth, and now combined with a new supply of labor that is re-entering Pakistan and expecting to be accommodated in the economy and be absorbed by the economy. And remember, their mentality is much more broader in the environment they are now coming from as compared to the local youth mentality, and they're expecting a little bit more of adjustment, the way, if not all the same adjustment what they were having before outside Pakistan. So the government is under pressure. The government is under classic pressure that now it has to face this inundated labor supply, which is now a unique labor supply. And if it wants to create enough economic activity, the financial stress is so much that it is really out of options. And this scenario is not only there in Pakistan, in Oman, the government is facing 3 or 4 kinds of economic stresses. Oil prices, they are already facing rating downgrades, cost GDP, debt to GDP is skyrocketing, business activity is low. On top of it, the COVID scenarios. The youth in Oman is facing the same situation, and as I mentioned, similar other countries too. This is where, as you've rightly pointed out, the out-of-the-box solutions through social financing, through, for example, the modern or a broader implementation and understanding of zakat, or understanding of awqaf, or the endowment schemes, for example. I'm just naming 2 of the prominent modes of social finance. If they are implemented in an out-of-the-box way, particularly for this young and unusual a mass supply of labor that has come in. These guys are not looking for consumption smoothing necessarily. This is what my submission is. These guys are not necessarily looking for marriage loans. These guys are not necessarily looking for, sadaqat or charity. Some of them don't even want to go at that level at all. The white collared people. You don't expect a person who's returning back to Pakistan, who was at a certain decent position, for example, in UAE, and now you go and expect him to go for this 101 traditional solution through social finance, because the other financial schemes are not addressing the situation. You don't expect him to go into a sadaqah territory or a charity territory. It will not suit him. It will be an ego issue for him. So this is why, implementing and giving this freedom to government that, hang on, while the traditional modes are not being sufficient or are too cash strapped, why not look at the social finance, which you're already familiar with, but this time look at it in a new normal, new age manner, given the new normal situation, and then implement it in a much more broader spectrum. And hang on, the recipients this time, if not all the times, are not always looking for consumption smoothing. They're looking for economic empowerment. Now use these modes to help them be absorbed in this economy, which is already very tightly strapped in so much economic woes. But this gives you a new breathing space where, at least through Waqf, you can perhaps create this new fund where you can perhaps supply the same fund which you're normally not in a position to supply to these younger people who are very tech savvy already, as you rightly mentioned. They don't need necessarily a banking solution. They don't need to be banked. I was in another forum a few days ago. I was sharing a Malaysian data where 85% of Malaysian youth, according to economists, that's 2018 you're talking about, 85% of the Malaysian youth is ready to pay extra cost as long as banking or financial services become on their palm top. You see? So they're not necessarily looking for a financial inclusion that is driven to make them a banking customer or have them open an account. They're just looking for a fund, bright people, bright young people, classic tech savvy people, on top of it, a labor class that is now entering your economy that are very experienced in their own expertise. They're looking for economic empowerment. Supply them a fund, which a normal government tax or government grant model or any other similar traditional solution is not there. Social finance or philanthropy can be used in a very user-friendly, not hurting everybody's egos as well at the same time, in a very applicable manner. And this is why, you're very right, Khatib, this can be one success story is what I'm trying to say. If you are struggling to get a success story, who knows if a Pakistani economy or an Omani economy or a similar economy or a Jordanian economy, these days world is similar. It's a collective one nation, world has to act like a one nation, classic risk sharing has to be done because similar problems are being faced all over the globe in a globalized version of the world, intensely globalized, multipolar. So I think this could be one success story, and this leads me back to Dr. Hussein's comment, where he's trying to come up with a technology platform that is addressing this in the same way that you just mentioned. And Salim, being a member of Minhaj and being a member of team under Dr. Minhaj and his contributions and his models and schemes, and I've just used Pakistan, for example, as a case study. What do you think social finance can do? What efficacy, relative efficacy and effectiveness it can offer to address these issues, particularly in a post-COVID or during COVID-19, Pakistan, for example? And do you think this can be a success story? Would you agree with that, Salim?
Bismillah ar-Rahman ar-Rahim. First of all, I thank you to give me the opportunity over here. And I'm very thankful to the advisory and organizers of this forum. I want to elaborate in initial that what is the social finance. Social finance is comprehensively defined by Quran in Surah Al-Baqarah 177, that it is not righteous that you turn your faces towards east or west, but it is righteous to believe in Allah and the last day and the angels and the book and the managers and the messengers, to spend of your substance out of love for him, for your kin, for orphans or for the needy, for the wayfarer, for those who ask, and for the ransom of slaves, to be steadfast in prayers and practice regularly charity, to fulfill the contracts which you made, and to be firm and patient in pain and adversity and throughout all periods of panic. Allah subhanahu wa ta'ala has defined the social finance in Quran. Now we come to the next point, which is over today, is philanthropy. Philanthropy is the art of giving back, and it is defined as it may be defined as the main objective of the donation is to develop the social, human, psychological, and religious capital that will enhance the productivity and efficiency of the community. The basic issue which we people are going to face in these eras, that the people who are going to give the charity in the form of zakat, in the form of sadaqah, they are addressing to the personal, to the persons, to eliminate the hunger, to giving something to the people to eliminate the hunger. But the main purpose, the main issue of the era is this: to enhance, to enable a person to be a valuable member of the society, which a philanthropy addresses. So if we people can, if a philanthropy and the social finance can contribute to enhance the capital for the people and for the society, the capital are of two kinds, which is the tangible capital and the intangible capitals. Through the tangible capitals, which is the money, which is the profit from the different communities, from the different businesses, from the different avenues, the people can enhance the intangible capital through philanthropy. The intangible capital is religious capital, psychological capital, social capital, and human capital. And to enhancing all these intangible capitals, we can make the people, as the Khatib already mentioned, that a number of people, billions of people have not access to the banks, but they have their the mobile utility, and the youth, as far as you mentioned over here, that our youth is wandering over here and is not in the main track. So enhancing these intangible capitals, the society can enhance these people's capacity through the philanthropy. This is the main core issue of this one. A lot of organizations in Pakistan and in Bangladesh are working on this capital enhancement through microfinance. For example, Akhuwat in Pakistan and Janmin Bank in Bangladesh. But as far as and there are wonderful experience of Akhuwat that they have given a number of loans to the people, to the community, community-based loans, and they recovered 97% of this out of these capitals. So as far as the response of the people is very much promising and very much enhancing, but all these things cannot be done by the microfinance institutions. So as far as the Islamic financial institutions are concerned, there is a need of the art, there is a need of the time that Islamic financial institutions come ahead and decide to earn the profit, because as far as the Islamic financial institutions are concerned, although they are serving for the Sharia compliant products, but they are only the organizations to earn the profit for their shareholders. If they come a step ahead to the philanthropy and the social finance and maintain these and maintain and project these works and take these objective from the microfinance institution and make a myth under the OIC or Islamic Development Bank, I think it would be a wonderful thing to enhance the social finance and philanthropy into this public era.
Well, thank you very much, Salim. That was very insightful, and thankfully, I'm very much thankful to you that you've actually mentioned that, although microfinance is always the predominant way to move forward when it comes to economic empowerment through social finance, that's not the only way that should be focused upon. You see, I think, as efficable or as potent the microfinance sector is, and I know few institutions, including Akhuwat in Pakistan, who are using it to the best level, in the best manner possible, trying to address, poverty alleviation and economic empowerment in Pakistan. But I am a strong believer that overburdening microfinance is not going to do any good to microfinance or any good to the whole notion of social or philanthropy finance, because it is much more bigger than only microfinance. It is much more potent than only microfinance. It is much more broader than only microfinance. And who knows, the other instruments that are less relied upon as compared to microfinance may end up being more effective than the predominant model or the predominant mode of microfinance that is so much relied upon. And this brings me to the second question. And Dr. Dar, I especially need your insights on that. I've just mentioned that, looking or basing microfinance as one of the predominant schemes to address economic empowerment through social finance perhaps may not do any justice to the real potentials of social finance and overburden microfinance. What do you think are or should be the other best methods or modes that can be relied upon simultaneously, if not, other than microfinance, that can deliver the panacea that has been in the want for quite some time now vis-a-vis the potential of social finance? And would that solution that you may, come up with, do you think would it be a better choice to address financial inclusion, provide macroeconomic support even, or help us address or handle the green and black swans together? What do you think? One may perhaps could be is to look at Waqf that has been so understood and underutilized, and perhaps take this as one mode and focus on that and try and broaden its spectrum as well as application. Dr. Dar.
Right. I must say that whatever we are saying about social finance is right and true. However, at the same time, we should not be overemphasizing on it. When we look at the prevalence of social finance in the world, at best, it has played a marginal role in the economic development and growth of all the societies in the world. It is a one tool, and proponents of this, they are emphasizing on its potential role in future. However, I think we should remain realistic at the same time. We, the Muslims, for example, we emphasize on the role of zakah. And I have heard people saying that zakah has the potential of eliminating poverty from the whole world. It is a claim. Okay. It may not be true. It hasn't, we give example of a very distant example of Umar bin Abdul Aziz, radiallahu anhu. During his time, there were no zakat recipients. Okay. And I think, there is, and I'm not doubting this one, okay, and this happened even before that as well. But in the modern world, the problem of poverty is so humongous that overemphasizing on one tool, this may not be entirely appropriate. You talked about institutions. United Nations, UNDP, for example, to start with, and now the whole machinery of United Nations and World Bank and IMF and IDB and ADB and African Development Bank, all of them, they have adopted the SDGs. And they have not only adopted, they are trying to support with money as well. and the time frame they have come up with, 2030. Many analysts, they say that, these SDGs, only partially their objectives would be achieved. And I think this is a very realistic approach. Similarly, when we refer to awqaf, look, we have this huge sentimental attachment to awqaf. But historically, empirically, awqaf has proven to be an institution which has decayed over the centuries. We can talk about the reasons, okay, and there could be a number of factors which have contributed to the decline of awqaf. But the empirical, unemotional stance should be that this has actually failed over the years. In the beginning, yes, okay, when the Islamic civilization was thriving, this institution was thriving as well. However, okay, in the recent history of the Muslims, okay, awqaf have not played a significant role. We have some glaring examples of success here and there, but looking into awqaf as a macro kind of institution, we have only limited success. So coming to this, how can social objectives of social finance can be achieved through a mode? There cannot be just one mode. I am a strong believer of market mechanism. If we can create some market institutions with a focus on achieving social objectives, this would be more sustainable. There must be an individual incentive. Why I would like to contribute to this social project or that social project. Right? And I'm not talking about just pecuniary benefits. So there must be some incentives for me. Right? This is human nature, that we would like to do the things in our own way. Mughis, if you are propagating something, you would like to have your own input. Right? You would like to do the things in your own way. Now the whole society has become, it's actually very capitalistic in its nature. And there is nothing wrong to be capitalistic. Many people would say that Islamic finance is a new example of Islamic capitalism. Right? So, don't misunderstand me. Okay? But what I'm trying to say is that there must be a capitalistic approach to developing social finance. And what do I mean by that? It's basically, we have to create individual incentives for people to contribute to social causes. There is an emerging literature in America and in Europe as well, which is on the economics of incentivization. Right? How humans can be nudged into behaving in certain ways. Right? Harvard, a couple of people over there, they pioneered this research, but now a number of other institutions and countries, and especially in the European continent, there is a lot of emphasis on that one as well. And these incentivizations, like I'll give one example. Okay, if you allow me just 1 minute, maybe okay, I'm taking too much time.
Sure,
if you give me, yeah, basically, there was this one competition, which was for aviation sector. The objective was to put some money, R&D money, into developing a new engine. So instead of asking this organization, this government, and this institution, a competition was run to design a new engine, and the winner would be receiving a few million, I think about $20 million. But the condition was that whosoever would like to compete, whosoever would like to participate in this competition would have to contribute a fee. I think it was about $100,000. As a result of this one, the money coming into that fund was far more than 20 million. So that money was used for R&D as well, and the winner was given that 20 million as well. So you have to come up with this kind of incentivization. I'm not referring to any particular example, but let me give you example of national bonds in the UAE. There is another new product which most people probably would not like, Emirates Lotto. These are the market-based approaches to contribute to social causes. In UK, for example, UK lottery has contributed significantly to the social causes. About 30 to 50% winners in Olympics. At one stage in their career, they have had access to the money, social money coming from the UK lottery. So if we have the organized businesses like Sukuk Wataniya, which is a Sukuk product, but this is based on prizes. It's a prize-linked investment product. So if we come up with prize-linked ventures, prize-linked savings programs, prize-linked other businesses, okay, I think, okay, we can raise a lot of capital money, capital which can be used for social causes. So this, capital social finance, it could be seen as a contradiction in terms. But I think we have to look into the market to come up with credible solutions for social finance.
Thank you very much, Dr. Dar. And again, as idea generating you always are, I mean, I'm all with you on this. And as I've been mentioning, we have to reorient our approach in understanding the application and the model of the whole ambit of social financial schemes. And you're very right. Perhaps a capitalistic understanding would create the right incentive structure for people who are the commercial financial gainers, then transform themselves into a social financer or a donor status. Because as I mentioned, that there has to be some incentive. Religious, yes, but we are talking about a global spectrum, and not everybody has a religious backing towards it. Like, for example, countries like Pakistan, who are crazy when it comes to charity giving, but equally less crazy when it comes to tax giving, for example. So you need this sort of change in mentality, be it the way you are terming it. You may have some Sharia consequences to face when you want to implement that, but at the same time, modernization of Sharia understanding of these applications or these suggestions has to be addressed too. They have to be reoriented simultaneously as well. And I'm a believer that I think we have lost at least one full generation of the 90s, where we could have seen modern Sharia scholars who could have actually, when they listened to you, would have found perhaps a little more appeal to what you are just terming and what you're just referring to. So I think even if you want to go with that, perhaps you may face some, Sharia consequences, be it good or bad. I don't want to comment on that, to term an incentive structure-based, donorship or application of social finance, be it a capitalistic-driven mentality. It's very interesting, very, very interesting. And I want to take this forward to Khatib. Khatib, what is your suggestion on that, what Dr. Dar has just mentioned? Do you think, a mentality reorientation is also necessary in terms of driving the right potential and hence the efficacy of social finance? And what do you think should be another mode of social finance which can play an equally good role, if not a better role, as compared to zakah or the microfinance? And having said that, zakah itself should be broadly understood and broadly implemented as well. What do you think, Khatib?
The way I look at this is basically I don't believe, I think that the problem is too complex to have one answer. And I believe we would be naive to only focus on one tool. I think Islamic finance offers many tools, and I talked to them in my first question answer. And I believe what we need to do is we need to approach this as an ecosystem. It has to be a worldwide ecosystem where basically we look at every project and every problem we're trying to address and create a sub-ecosystem around it. If it needs the funding, we figure out who's funding it and how are we raising the money. Zakat institutions and Waqf institutions definitely play a tremendous role in that. I believe the Zakat, a lot of people talking about institutionalize the Zakat. Don't forget that the Zakat in our Islam is actually a tax system. So we probably, if we want to institutionalize the Zakat, we have to figure out how it will coexist with the tax system. In addition, we have the Islamic microfinance institutions. We have even the Islamic capital markets. But in addition to all that, when we talk about the fourth industrial revolution, we talk about the crowdfunding and the fintech platforms and how they are playing a role in either collecting donations or platform for loans. So it depends on that problem. And even in addition to that, you will see some fintechs that are focusing on Waqf, which is also very important platform that we should not forget about. So I believe all these tools are just part of this ecosystem and the sub-ecosystem. So if we take a project and I'm not a big believer that we have a single platform that solves the whole social finance problem for the Islamic world. I believe that we will see, you have to cut it horizontally and vertically. You have to divide it per country. You have to divide it per project. Yes, we can have a body that governs all this like IOFI does or IFSB, but I believe you will see what is happening in the fintech, in the conventional part, will be happening and the Islamic finance will be happening also in the social Islamic finance. And an ecosystem has to be developed. And this ecosystem will actually allow us to address project by project. If you allow me to give a simple example from actually the conventional world. In Africa, there is, and everybody heard about the M-Pesa, but I don't know how many of you heard the M-Kopa. M-Kopa in Africa, in Kenya, or Uganda, and other countries, it's basically, it focused on a single project, which is, there was a lot of thousands, hundreds of thousands of houses did not have electricity in these regions. So basically they introduce what they call M-Kopa to provide solar energy based solution for these homes, 100,000 of these. Then when they came to pay for these, basically what they do is they do not get a payment in front, but actually it's an ongoing payment paid based on the utility. But how are they paying for this? They're actually using the M-Pesa. M-Pesa, which started in 2007, and by 2017, there was over 194,000 Kenyan households were taken out of poverty because of this M-Pesa. So this is what I'm talking about, a sub-ecosystem. If you basically had the M-Kopa idea and you wanted to do it and you did not have a payment method and you waited for the government to put regulations and to go through the whole process to actually allow you to pay for this M-Kopa, that project would never took off. But because that sub-ecosystem was there, then you can actually do it. So I am proposing that we have to start working on the ecosystem for the Islamic social finance. We have to start understanding what are the components, who is providing the revenues, what are the projects that we are targeting, and all these subsystems in that ecosystem has to actually communicate and work together. Thanks God, the technology allow us to do that. It's the open architectures, the open APIs, the open banking that I heard earlier about in Australia. All this will allow all these services to actually work together and focus on project per project or on a social program per social program. This is my view and how I would think is the best way to attack such a problem.
Very, very good. And you've mentioned Africa. We have this wonderful African representation coming up in the next panel. And I think you are bang on target when you said we need an ecosystem / a sub-ecosystem approach. And I think that's it. I mean, one of the takeaways from this session, at least for myself, would be that yes, an ecosystem approach of whatever we have been discussing since the start of the session till now is going to be an extremely important way about towards using and addressing the issues via social finance. And Salim, I mean, I just want to, we are...
It is your time to find your place in the world. Minhaj University recognizes your potential. Extensive libraries and resources broaden intellectual horizons. Job placement, scholarships are at the heart of affordable education. Prize-winning faculty mentor every step of your way. We groom champions. Minhaj University, where dreams come true. We can take you there. Admissions open. It is your time to find your place in the world. Minhaj University recognizes your potential.
Which define the infrastructure of philanthropy organizations, and it should be monitored and it should be observed by some monitoring body like under the supervision of OIC or IDB, which make the regulations for this body and make it easier for the investors and for the philanthropists to come under one head and do the same for the betterment of the social finance.
What do you suggest, Khatib? Would you back the idea of having a body in the sub-ecosystem that you referred, a dedicated body for social financial sector or philanthropy?
I definitely do. I think IOFI and IFSB have advanced the Islamic finance tremendously, and having this body is a vehicle for all those countries to work together and come up with the standards, and I think it's very useful, and I definitely support it.
Your take, Dr. Dar, on this?
Actually, any infrastructure, industry infrastructure development body is always helpful. But I must say that these examples are there already, and we have to create synergies. In America, for example, we have a Council on Foundations, right, which does a lot of advocacy work, and of course, it offers advice and direction to philanthropic sector, which is huge in the USA, as you know. All these big foundations, they are based in Rockefeller Foundation, Asia Foundation, and so on. So it's similar. Of course, Council on Foundations, it has a focus on American foundations, but these American foundations, they have global operations. Similarly, in my own country, here we have Charities Aid Foundation, CAF. CAF has played the role of an umbrella charity for about 6,000 charities in the United Kingdom. And if we go even beyond CAF, Charities Commission for England and Wales, okay, this is a regulating body for charities. Right? And of course, Charity Commission for England and Wales, okay, this is a body only relevant to England and Wales, not even Scotland. However, what I'm trying to say is that there are examples, okay, of systematic efforts to promote and regulate charity sector. What you have suggested is actually very much in line with what KNEKS is thinking about. I believe they are at a very advanced stage of announcing something similar to Islamic Financial Services Board. When they talked to me, they said they would like to have something like Islamic Social Financial Services Board. And I told them the idea is good, okay, but don't try to copy or add something to an existing acronym. So KNEKS, which is funded by the government of Indonesia, they have plans to have the general secretariat of this body, which you are mentioning, in Jakarta. And I think, okay, that would be an excellent move, given that Accounting and Auditing Organization for Islamic Financial Institutions is based in Bahrain. IIFM is based in Bahrain as well, and IFSB is based in Kuala Lumpur. And I believe the Indonesians, okay, they would now like to play a global role in Islamic finance, and they have chosen social finance, especially Islamic social finance, as their forte. As you know, Indonesia is, it's the paradise of social finance, especially with a huge focus on Islamic social finance. So these guys, they're very seriously looking into the possibility of setting up a multilateral body like IFSP and AOFE, but with a focus on Islamic social finance. So I endorse the idea. It's a good one.
Fantastic, fantastic. And I think, I mean, this is wonderful news. If something of similar stature or status is happening in Indonesia, Indonesians, credit to them, they're very smart and insightful to look at this in a way and make it as one of their own driving force and a distinguishing factor by focusing on the Islamic social financial sector and coming up with a dedicated body. Guys, I mean, of course, we have a lot to share. I can keep on listening to your expert self because it's a huge learning for me the whole day. And I thank you very much for your time and very, kind expert sessions that we have been together. I hope the audience have gained a lot from this session. It's been very stimulating, very thought-provoking for myself, and new notions of, capitalistic-driven incentive structure of social financial world, making people attractive to become donors or social financial, experts, and then the notion of having a sub-ecosystem, have a dedicated body. I think we've discussed and discovered a number of important initiatives, and thank you very much, guys, for this incredible session. Good insights, inshallah, and of course, it will give us some good policy direction, and I give it back to Emma. Thank you very much.
Thank you, Muhiz, and thank you, panelists. I have a lot of thoughts on all of the topics that you covered. Very, very interesting. One thing I would say, when we are talking about creating standards in these industries, my personal opinion is that we do rely on institutions to create these standards, we do have to remember and understand that these will most likely be biased or to their own benefits. So I believe that we need to bring transparency and especially bring the voice from the society and the ecosystem to contribute and then participate and ensure that the real values of social finance are being upheld. But we are a bit tight on time, so I'll go straight into introducing session 2. Here we'll be looking at the role of fintech solutions in driving the efficiency of social finance. Fintech is moving at an incredibly rapid pace, but we often forget about the fact that a large part of the world just doesn't have access to these technologies. So our lineup includes a distinguished panel moderated by Mustafa Kugu, the founder of Fintech Motion, which brings together respected leaders and game changers for fintech innovation. Joining him, we have Dr. Babatunde Ubrima, the COO that is driving aspiration at the Fintech Association of Nigeria. We have Ibrahim Misto, a passionate entrepreneur driving Africa's digital future and the ex-vice president of Emergent Payments Africa. And lastly, we have Tahir Emra Tuzun, who is the head of sales and market development at PayPal Middle East and Africa. So thank you, panelists.
Welcome everyone. It was a really great session for so far. We had many insightful talks about market leaders, and you are hearing me, by the way?
Yes, it's clear.
Yeah,
okay.
We can hear you.
Yes, we can, Mustafa.
Thank you so far for every speakers that insightful speeches. Now we are feel under pressure that what detail we will speak. Really, it's maybe we can say that so far 360-degree what's going on, and even during the pandemic and new age of the social issues about the technology and fintech side, finance side as well. So what I want to say, also welcome again everyone for our session 2 starting. Especially we will maybe focus on a little bit on Africa as well in private, and also Asian side. Mr. Omar is coming from Malaysia and effective in Indonesia and Singapore as well. So before start, I want to say something interesting, maybe all for us, as you know already. But let me underline that this what we are talking about, that fintech social is two word, that very heavy word. As inside fintech there is another two heavy word, is finance and technology. As you know, technology is changing the world very, very interestingly, sometime in some areas very fastly and agile, sometime in slowly but suddenly. And slowly, maybe you can say tsunami. As you know, sometime 5G is a kind of digital tsunami. It's coming slowly, slowly, but as you know, nowadays, after this year, this current year, 5G is a kind of new revolution, mobility, connection, and speed, and even a little combined thing that some satellites in all the world will be covered, all internet. You can say that after that, there is nowhere that internet is should not be. Yani everywhere somehow in connected. As some our speaker says that sometime maybe there is banks cannot go due to some people that serve the what should banks do. Even and just in paragraph, I want to open new paragraph. Maybe we need to redefine and design what is banking, or we need to comment about that as what is banking and what is financial channels and institutions under the government, or and generally by using technology, what's going on in the society, what society expects from the governments or the technology, and what we will do. So as I said, there is, as you see, technology, 5G, and beside the 5G and related with the 5G, even by as in promotional way, AI, we say AI, I mean artificial intelligence, including, when I say artificial intelligence, you can think both analytics, data-driven, data trust reporting, and self-driving cars or self-driving decision-making systems about institutions inside. And AI means big data, as I said. So all these scopes and new terms and redesigns and redefines of the social or institutions or finance and technology, fintech startups, how fintech startups can affect the banks or other institutions as well to serve customers more widely, and maybe more digital expectational standards level also as well. So I want to give thanks to Emma that introduction of the session speakers as well. So let's continue with Ibrahim Bey. Ibrahim Bey, as I know, you are from Ghana, and many years you are in scope of Africa. You are scope of in Africa as your professional career as well. What do you think about your observation in Africa as well? And you can combine also because of you are coming from telecom side or connection side of the society. So and now you are currently in fintech, as far as I know. So what is your observation and even expectation about the fintechs for future of the life? What do you think?
Thank you so much, Mustafa. Thanks for inviting me to this event. I'm really honored to be here today and then sharing this panelist with special guest as well, and looking forward to have a fruitful discussion that can be beneficial for the participants. So quick intro for myself. I chose to have my intro as a 5 or 6 slides that won't take more than 5 minutes, just to give some highlight about some of the projects that's done in Ghana has to do with social finance. In my previous role at one of the fintechs headed in Ghana, which is looking after emerging markets, and Africa is one of them, and driving financial inclusion. So that's to the heart of the discussion of the social finance. So I would love to share with everyone just key initiatives that we've done in Ghana. Some of them has been touched on, like by, I think, one of the panelists, Muhammad Khatib, about some of the basic services with social finance, like solar, like electricity, like gas, and so on. So let me jump and share my screen so we can I can take you through this quickly, and as we said, less than 5 minutes. And let me know, please, when you are able to see my screen.
Yes, I see.
Can you see it? Okay. So as you rightly said, Mustafa, so fintech is both technology and finance, and I had the privilege to work in both. So my background working with telecom and technology, and then joining a fintech. So I had the flavor of both. So how can we leverage that technology to meet social development, right? And in Africa, the context is around financial inclusion, is around social development, is around very basic services. Here we're talking about health, we're talking about education, we're talking about electricity, we're talking about gas, and then pay-as-you-go models. I think panelists talked earlier on about the ecosystem. How can you provide this to an informal population, low of the pyramid, people that can afford only paying on a daily basis for electricity, on a daily basis for gas, right? And leverage on this from a, let's say, mobile money ecosystem, paying from their mobile money wallets, knowing about mobile money as a success story in Africa. So these are the things I'm gonna talk about in the following slides. But so about financial inclusion in general, I think we all know around 2 billion people around the world, don't have access to financial services. They are not included yet. The opportunity is 3/4 of those have mobile phones, and that's where the opportunity to have the financial inclusion of financial services playing a role in including that community or those citizens to provide the basic service to them and extend those basic financial services to them to enable them access that and to enable those communities and to develop. So some of the 2 or 3 key projects we've deployed in Ghana for enhancing the financial inclusion and driving that agenda. One of them is called Saving at the Frontier. I'm sure maybe some of you heard of this. It's in a couple of the countries in emerging markets. Is a collaboration between Oxford Policy Management, between MasterCard Foundation, where grant was given for Ghana around $1 million to digitize savings groups. So communities, mainly in rural areas, semi-urban areas, that are not included, that usually sit under a tree and save in cash, in the wooden box, with all the risks that come to that, from fraud, from theft, from whatever. So these guys now transforming them into very basic, simple, say mobile money-based USSD solution that enable them to save now using their feature phones, right? And by the way, not all of them has feature phones. So if you look, close to 50% of the people in the rural area got a phone, and 50% they don't have even a feature phone. So these guys will be able to save using mobile phones, right? And then access, as a result, some basic services. So now having that record of financial record, will be able now to access pension, will be able to even access loan, and so on. So via such project, we'll be able to onboard 100,000 clients. And by the way, 90% of these are women in these rural areas. So it's how to bring, again, those informal population, low of the pyramid, right, to be financially included and to access very basic services that can develop their lives, right? A guy that's now be able to access loan, to access pension, to save for their future, right? And then to the point of building the ecosystem, such solutions can't work in isolation or its own without providing the ecosystem for it. When I say ecosystem, means proximity of agents, for example, super agents that enable these guys to load their wallets, to pay bills, to cash in, to cash out, right? To create, and that's as well opportunity to create jobs for people within these rural areas and within these rural communities. I talk about unavailability of phones. When we look at some of the reports, we see, oh, Ghana or whatever, 100% mobile penetration. Okay, that's an urban area. That's because of dual SIM. But actual and reality is, as I mentioned, 50%, people without phones even. So now with such initiatives, you can extend services and solutions like leasing a phone, like people buying a phone and paying an installment for the next 3 months, 6 months, right? Via those savings and digital savings we talk about. Another social development initiative is insurance, right? Only 30% of the Ghana population has access to health insurance, which is a low number. And that's done the traditional way, the bureaucratic way. People has to take one off day, go to service centers, queue for a full day to get access to the very basic health insurance, national health insurance. So again, the role of technology, which is developing, again, very basic USSD platform, which people can access, and then be able to subscribe and renew their national health service. So by doing so, we've noticed that around 20% increase in subscription to such scheme has been achieved, right? And then so those people have now get access to very basic service like health insurance. The last one I would like to touch on is as well another initiative for social development is pension, right? Around 10% of people in Ghana, only out of the workforce of 12 million, are subscribed to pension scheme. Again, very, very low number. Now, how can we bridge that gap? Again, the technology playing a role. So how can we monitorize those financial transactions? Again, these are informal workers. These are the electrician, the plumber, right, that earn on a daily basis. So how can via that income on a daily basis be able to pay as he earn for such micro level solution and such premium to give him access to insurance products like education, like even funeral, like whatever pension for the future and savings and so on. So these are a couple of the things that we do. These are key things that we've done in Ghana, implemented some of the success stories. And then just to end up my introduction is, so such commercialization of private sector initiatives help develop and achieve a sustainable outcomes for the communities. So thank you so much, Mustafa. That's my quick intro. As I promised, I didn't exceed the 5 minutes.
Welcome, Ibrahim. Thank you for your sharings as well.
So I'm happy to take any question, follow-up question further on.
Yeah. Okay. Let's make first tour and then finalize a second tour, and during the second tour we can continue with questions as well. That some readers reach us from questions, attending questions. You can see in the Zoom as well. So let's continue with Dr. Babatunde. You hear Dr. Babatunde from Nigeria. As same question as in Africa is what do you think, what do you observe in Africa that you can share with us about this fintech development in your region and Africa as well?
Okay, let me just speak to, when we look at fintech in Africa, I think fintech in Africa is growing, and it's growing at a very fast rate. When you look at, and I'll put this in perspective in terms of investment in the fintech sector. For example, in Nigeria in 2017, we had about $51 million in investments in the fintech sector. We had $128 million in 2018. And in 2019, we had $630 million in investment to the fintech sector. When you look at Africa, the whole of Africa had about $1.2 billion in investment into the fintech sector in 2019. So, there is a lot of investments coming into Africa. Let me give you some data on Nigeria. Last year, 2019, we had 90 billion transactions through digital platforms with a value of about $1.5 trillion. So that's the, but in the midst of all of that, only 40 million people have active accounts in Nigeria. We have 36 million people that are not financially inclusive. So that means that there's still a lot of work to be done, which affects social financing. In Nigeria, there's been various programs in trying to actualize social financing. So you have something the government calls trader money. It's supposed to help petty traders to get small loans of about 10 to 20,000 naira. But because we haven't resolved a lot of issues in Nigeria, there's financial inclusion issues, we have identity management issues. A lot of these transactions were done by cash. With the COVID challenge, stimulus palliatives were done paying 10 million families by cash. So they still, and once there's cash, you always smell corruption. So, for us so social technology is critical in being able to drive social financing, remove those issues of corruption, ensure efficiency. For me, I think that social financing must have economic impact. Which we've seen some of it. For example, in the agricultural sector in Nigeria, we spend $300 million every year importing rice into Nigeria. until 2015 when the government said, no, we have to increase production. And they've been able to motivate, stimulate, fund farmers. And right now, we no longer import rice into Nigeria. I mean, that's a social financing because the farmers were given money at 5% interest when commercial rate is 26, 27%. So that's been quite impactful and has impact on the economy. But generally, there's still so much in terms that technology can use to drive social financing. In Nigeria, we have 200 million people, only 1.6% are insured. So the insurance space is such a huge space where there's so much to be done, and you need technology. Technology would obviously, InsurTech will be a good platform to be able to achieve that. I mean, there's in the last, I think, 5 years, over $238 million have come into Nigeria in terms of social financing, various groups, NGOs, to do one thing or the other in terms of social development in rural areas. But then I think that I'm of the view that there's a need to coordinate some of these efforts, use technology to drive it, and you can actually see impact, because you can see so much money, but then very little impact. We've seen impact in some areas, but technology is critical to driving finance and, importantly, social financing. Thank you.
Most welcome, Mr. Babatunde. Thank you for your sharings about Nigeria. And then we will continue. Let's continue with Emrah Bey from PayPal. As far as I know, Emrah Bey is leading and caring Africa region. And as the PayPal perspective, Mr. Emrah, what do you think about Africa ongoing on the PayPal? How deal with some payments issues and new fintech solutions? What do you think from PayPal perspective for Africa?
Thank you, Mr. Obe. Thank you for the kind invitation for the panel. So Africa is the next way of growth for a lot of the players. And that's also true for the case of PayPal as well, where the penetration of the digital economy into the core markets, be North America's and Europe's, has already actually matured. And we see, Latin America, these emerging markets in Africa as the next way of growth. And there's a lot of good work that's already been done. So the underlying fundamental consumer readiness is already there, as mobile money operators and wallet type of solutions for unbanked population has been successfully launched in the continents. More so that it is, in a sense, as an example to many of the mature wallets and fintechs out there. M-Pesa is a good example of that. So what we see as far as Africa is, it is going to continue as a growth market. There are a lot of partnership opportunities due to the fragmented nature of Africa per se. And that's where maybe coming back to the initial questions about the regulatory framework. I mean, there is definitely a need of gathering some of these markets and enabling more players into the markets in a more scalable way would be a catalyst to that growth. And that said, the partnerships as well to allow local consumers to access into the other digital buyers. So it could be the cross-border trades, where in a selective market, the internal market might not have a huge market opportunity on a digital market opportunity. But with some couple of partnerships, and that includes PayPal very much so, you could grow your total addressable market by allowing to sell into Europe's and North America's, where the digital economy is in the trillions. So that's where that we are focusing on as PayPal, allowing sellers in Africa, for the most part, to sell into some mature markets and access into these bigger, larger market opportunities, as well as on the consumer side, allowing them to shop securely online in a cross-border nature. And the reason that we're focusing on cross-border is, once again, the total addressable market is a key indicator of success for any kind of fintech player, e-commerce player, and so on. At the same time, it does present an opportunity for leveraging the playing field for an SME versus a large conglomerate with a lot of capital. Because when you start selling into these unique European markets and North American markets, and your competitors locally don't, all of a sudden they are sticking to a smaller market size per se, but then you are getting maybe a smaller share on a more mature market in Europe, in France or Germany or UK, but you're getting more for your buck.
Thank you for your sharings, Emrah Bey. It's in general and good drawing for us as well. So let's as first line. Let's continue with our next panelist, Umar Bey from Malaysia. So a little change from Africa to Pacific region. What's going on Pacific region, and especially these days in 2020 is really a very, very interesting year for everyone. And we were waiting for a technology break point as nowadays, as 5G is coming as well, and AI coming as well. So what do you think now? What's going on Pacific region as fintech side of your perspective? I know you are also keen of Islamic finance and fintech solution you have. So by combining them, we would like to see and hear from you.
All right, thank you very much, Brother Mustafa. So before that, of course, I'd like to thank the organizers for inviting me. Sorry, let me take this off. Okay. Yeah, so in this part of the world, there's really a lot of things moving. You know, Indonesia is, as mentioned by Dr. Da earlier, it's really very vibrant. It has been vibrant for some time. And with the COVID, it's forced to be even more vibrant. It's forced to find new innovative solutions. And a large part of that, I would say, is also driven by fintech, or at the very least, fintech is starting to have a significant impact or role to play in this space. For example, you mentioned AI. Recently, I mean, our company, at least my company, we have licenses for crowd investment in Indonesia as well in Malaysia, and we also have a charity platform called globalsedekah.com. Now, in Indonesia, we do social impact investments, right? And recently, we've been in deep discussions with a startup in Indonesia that has developed an AI-based credit screening system for microfinance. And over the past 2 years, they've had impeccable results, right? Incredibly low MPLs, and it gets better and better. So this is the future that is already here, and we're only going to see it pick up momentum over time as more and more startups start to experiment, and not only more and more starting to experiment, but also stakeholders starting really to become more open and more available to work together with this kind of potential disruptions. Now, in Malaysia, which is arguably the leading Islamic finance hub, here there's a lot of development already in Islamic finance. But in fintech and in social finance, I would say the past 6 months has seen a lot of movement, a lot of plans, and we should start to see some of these plans start to be implemented in the economy, also because of need. So the COVID has been a blessing in disguise, in a sense that it has been a catalyst for change, and that's not only in Islamic social finance, that's not only in fintech, across the board, across the world. Yeah, and I want to share as well that for Ethis, what we have done, I mean, Ethis and Global Sedekah, our platforms, we have looked at possible solutions, right? And we have looked at the solutions that are already there in Islamic social finance, as was mentioned earlier, Qard Hasan, Cash Wakaf, Wakaf, and of course Zakat, and general charity. Now, these solutions are already there, but they are not, I would say, not yet properly implemented at a large scale in a structured, organized manner. And that, to me, is the a big loss to humanity, not just Muslims. My belief is that because of the entrepreneurship spirit that exists in big tech startups, we will see this start to be implemented in the real world, maybe initially on a small scale, but very quickly, as you mentioned, it can become a tsunami and have a huge impact. For Athens itself and Global Sedekah, we are right now, I can share, I mean, we've not stated this publicly, but in this forum, I'm happy to share that we will be launching, inshallah, a Card Hasan Fund in Malaysia, and a Cash Wakaf Fund in Indonesia. And the Card Hasan Fund is very, very critical in Malaysia because it's meant to help small businesses, micro SMEs, and individual small entrepreneurs to get back on their feet or kickstart after this COVID slowdown. And in Indonesia, the Cash Wakaf is going to be focused mainly on social housing, where we have been very active in for many years. But we've been bringing investment funds. Now we want to bring in Cash Wakaf funds, which is a much more patient form of capital. So, I mean, I'm just sharing with you how there's a lot of things that are happening. Some things will work out, some things will be try and error. But I believe, this spirit of entrepreneurship that exists in fintech is something that will bring the main change that we see in this part of the world. Especially in Indonesia, you see so much entrepreneurship spirit and drive that is inevitable for solutions to come and for solutions to have an impact fairly soon, inshallah. Yeah, maybe I'll stop there for now.
Thank you, Mr. Umar. Thank you for this observation and your issues and this explanation. So, as let's second phase of this session, and before the second session, I want to say, just when I was searching for the more deeply about what is the social banking. In terms what people expecting or understanding social banking in internet, I saw and it was interesting for me that some bank managers make some social fintech presentations, including that they just say that social banking is a kind of social media banking as well. Of course, this is including that as digitalization of the mobile reaching or some connection reaching that people on banking, but has social media or internet connection that it can be more easy to combine or cover them and their banking systems. More or less, as this especially your country banking systems or regulations or your politics. Especially in country and Africa as well. What do you think? What should, as Mr. Ibrahim project reach to some people that has no maybe no finance system or products? What do you think about your governments or your from your expectation from your governments or and the Africa on Pacific? What should be? What is your opinions? What should be as banking systems or another political systems should decide and make and should insist on something to release something? If you share, Mr. Ibrahim, again on and with the second phase of with your conclusion sentences that our session also will be ending in short.
Yeah, I think maybe from my end, I just posted this morning on LinkedIn. I think there is, which is long awaiting, is a crowdfunding licensing for financial institutions so that players can make available crowdfunding platforms for, let's say, startups, SMEs, MSMEs, so that people can raise fund and be able to get access to low-cost fund versus what bank currently provide in terms of high interest rates and stuff. So it's more equity-based. So I think this has been long awaiting expectation. This framework should be out by next year, late next year, so that it's licensed and the regime is ready for such initiatives to take place. So I think this can help in terms of the ecosystem here, especially for medium, small, and micro businesses.
Thank you for your sharings, Ibrahim Bey. Mr. Ibrahim. And then Emrah Bey, what is your expectations as PayPal? Is there any restrictions like Turkey? But Turkey is unique, I think, some of this kind of issues. What is your expectation for as PayPal to reach and to make more submission fintech business and make it easy, some digital payment for between the B2B and B2C, or what do you think about this? If any government make you some restrictions, or you are waiting more something as regulations, or you are happy now with current situations about governments?
So, I mean, in the perspective of Africa, so I think there's a lot of good work being done with the African Union that is in motion as we speak. So that's a lot. That's promising. As the African Union identifies e-commerce and the digital economy as a strategic area, and does advise a lot of the leaders, the market leaders, government officials to actually nurture. So that is going to act as a catalyst. So that is very good news. But that said, coming back to Africa or the Middle East being a bit, putting a GCC a bit aside, a bit still fragmented, right? And in that regard, I think partnerships comes into play. And it's the key part of any success. Because if you do want to succeed in this part of the world, I don't think, can do it alone. I don't think in Africa there is one winner takes it all type of an opportunity, where there's going to be multiple winners in the continent as the size and geography and population, various infrastructure, the different infrastructures is going to keep the continent a bit fragmented, as much as there is a lot of good work being done by the African Union. And I think a good example of that is, we recently, when I say recently, about a year and a half ago, launched the M-Pesa partnership in Kenya, where you could move funds between an M-Pesa account and a PayPal account. And all of a sudden, we did enable, as an example, the digital economy, worldwide digital economy, to an unbanked population in Kenya. It was enough just for you to have a PayPal account, just enough for you to have an M-Pesa account. And that is also more true when it comes to a lot of these partnerships that's being launched between the schemes and the mobile money operators. So, for example, how you tokenize a mobile money account, and in the back end, link it to a 16-digit card number for you then to transact globally wherever the scheme is accepted. So these are kind of similar partnerships that just basically shows the need for a partnership. And again, we see that that's key. There isn't one winner takes it all type of an opportunity, and there's going to be multiple winners in Africa, and that's going to come with partnerships.
Thank you, Emrah Bey, for joining and this sharings to us. And then let's continue with Mr. Babatunde about Nigeria and Africa as well. What is your expectations or waiting something and regulations from government and from fintech institutions? What is your opinions about this issue, Mr. Babatunde?
As an association, what we try to do, one of our objectives is to advocate, and it's working with regulators to ensure that we have progressive regulatory reforms within the fintech ecosystem. So last year, we were able to work with SEC, and now there's a guide policy that guides crowdfunding. So what we had before, we had a lot of people in agriculture who were doing crowdfunding, but they were not regulated. Now it's going to be regulated. So more money can come into crowdfunding. A lot of SMEs can actually raise money through that source for their business. There's also an initiative we have with the Nigerian Stock Exchange, which is called the Growth Board, which allows young, small fintechs and startups with turnovers of about 50 million naira. 50 million naira is small, that's just about $100,000, can come onto the stock market and raise funds. In addition to that, I mean, the federal government just set up a committee to look at blockchain technology for the country. I mean, and we've been brought into that committee to see how we can bring in new technologies to solve a lot of issues. We have identity management issues that needs to be solved. That's actually foundational for you to be able to, for example, we have 178 million phone lines, mobile phone lines in Nigeria, but there are only 40 million bank accounts. So that's a huge gap. And that gap has to do with the issue of when you're opening an account, you need some form of identity. And where you don't have that, it becomes a problem. So being able to marry those, be able to resolve a lot of the issues and be able to affect social financing at the grassroots. So you can have microcredits, microinsurance, micropension, and using super agents and agency banking to be able to achieve all of that. So there are a lot of policies being rolled out. So there are policies from the central bank on agency banking that's been implemented, but it's supposed to help to solve the financial inclusion issue. But I think that there's more that needs to be done in that area to actually achieve more. And technology is critical to all of it. But a lot of policies being put in place. And once the implementation takes off, I think that it will be a game changer in terms of reaching those at the bottom of the pyramid.
Thank you, Mr. Babatunde. Thank you for your sharings about Nigeria, and I hope the gap you mentioned, the gap between this accounts between mobile subscribers and banking people, I hope in soon somehow closing. Before Umar Bey, Mr. Umar, I want to invite Emma, Lady Emma, because she is also representing Australia and a kind of and big kind of Pacific also. So together with Umar Bey is what's going on Pacific as Indonesia, as Singapore, Malaysia, and Australia. We like to hear from Emma also. What's the fintech impact in Australia and nowadays, and what expectations for future from Australia as government, as social as well?
Sure. I guess I would start by saying I think in the past, Australia took more of a cautious approach on the regulatory front to allowing a lot of the fintech ecosystem to develop new products and services. But earlier this year, APRA, which is one of the financial regulators here in Australia, they launched, I'd say, a fintech innovation sandbox. And since then, a lot of the ecosystem has really developed. And I mentioned before earlier around open banking. So I'm sure a lot of people have started hearing this term over the past year or so, and particularly this year, it's probably become more common. So open banking, very sort of simply put, is the secure way to give providers access to your financial information. So instead of just banks holding it, you can have third-party providers have access and then be able to build more personalized products and services on top of your information. So Australia, I'd say, is taking a very innovative and also forward-thinking approach to open banking. So unlike UK and other areas where they're just looking at how to enable the big financial institutions or big banks to open their APIs for data sharing, Australia is instead looking at how to create, I'd say, an ecosystem around some of this data. So bringing in energy providers, telecommunications companies to actually also give information if a consumer allows it. And this will be really, I'd say, incremental in contributing to things like a consumer's credit scores, having more relevant information, and then being able to build more useful services or products, or even allow additional lending features, these kind of things on top of that. So I'd say Australia is leading a lot in that area. If I link more to the theme of the event and social finance and social impact, there's, I'd say, a lot around the social investment or venture philanthropy front in Australia. You have one company called CIFA, and they've been operating since 2011. And what they do, they actually build, I'd say, very custom and unique investment portfolios for investors to actually invest in and contribute to. And these are all driven around philanthropy and social financing. So they've channeled more than 80 million into some really great projects, from disability services and building sort of disability-enabled homes to enabling sort of greater financing for farmers, and then also helping some of the youth of Australia. So this is, I'd say, another example in Australia where the fintech ecosystem really has a strong impact. But I would say that we're still at an early stage. And when you look at, you know, areas as well like US or Silicon Valley, where you have these large companies like Stripe in payments and really innovating, we still have a long way to go on that front. But I think open banking is somewhere that we're going to bring a lot of value.
Thank you, Emma. Think about for Australia and for a specific and our session, last session and last speaker, Umar Bey. We want to hear from him about Malaysia, especially, or other country as well. How is your or fintech issues going there? Is there any regulatory restrict or as any open banking strategy they have, or any other fintech strategy they have, you are expecting from them?
Sure. So maybe not so much on the open banking side. I think Malaysia, Singapore are giving licenses for open banking. But before I go to the regulators, I think just reflecting on this session, since I'm the last speaker right now, there are a lot of things happening in Africa, as we have heard in the past 1 hour or 2 hours. And there's a lot of things happening in this part of the world as well. I think what's very, very important is for us to not only build bridges, but continue to strengthen those bridges and utilize those bridges between regions. Right? Alhamdulillah, within Athens, we are quite well connected in our own circles. I'm the president of the Islamic Fintech Alliance, and my co-founder Ronald in Indonesia is the president of Sharia Fintech Indonesia, and one of our advisors, Rizwan, he's the president of Fintech Malaysia. So within our circles, we sort of know everyone, and from there we have so many different solutions that could potentially, bring benefit to other parts of the world. And conversely, from Africa, there are so many solutions that could potentially be implemented in Southeast Asia or Asia Pacific. So these kind of sessions today, I hope will result in some friendships and some relationships and business together over time, inshallah. But on to your question on regulators, the 3 different regulators that I've been closely working with, our companies have been working with, Indonesia, Malaysia, and Singapore, are very different in their approach because the countries are very different, the environment is very different. Singapore, of course, is the fintech leader in this part of the world, I would say. And however, for all 3, there's still this issue of when you want to get a license, when you require a license, especially when it's early days, it takes a very, very long time. And that's a huge, huge issue where, it takes 2 years, 2.5 years, or even 3 years sometimes to get a license in the area that we operate, which is investment and crowdfunding. But at least there are licenses. I understand in Africa, licenses are just starting to come, but do be cognizant that it can take a long, long time before the licenses do come out and you're able to use it. Malaysia has done something very interesting recently, specific to our space of crowdfunding. Just about 3-4 months ago, they announced some maybe liberalization measures to increase the cap of what we can raise on our platform. So we are doing equity crowdfunding. In the past, the maximum was 5 million ringgit, about divided by 4, about 1.2 million, 1.3 million US dollars per issuance, right? Even startups, we can find any kind of entity that's based in Malaysia. Right now, they have just doubled it to be 10 million, about 2.4 million US dollars per issuance. So that's very significant. And secondly, they've also allowed a secondary market. So now not only can we do primary issuances, there can also be liquidity on our platform through the secondary market. And I'm happy to share that we are currently at the final stages of our go live approval, and we should be able to go live in Malaysia, the first Islamic equity crowdfunding platform in this region next month. Yeah. So regulators here have been cooperative, forthcoming, but it has taken a lot of time. And we do see all these indications that there's greater desire and greater willpower to facilitate the growth of fintech. Also similar to the point I stated earlier, due to the strong and high need, to find solutions because of the COVID situation. Everybody wants the economy to recover, and the incumbents are not able to provide the solutions that are needed. And so fintech has this role, and Islamic social finance especially has the role where we can step up and have viable solutions.
Welcome. Thank you, Umar Bey. This summarized and brief info about your site. And now we are almost 5 p.m. in Turkish time, Istanbul time, and then we are almost in targeted time that we are closing our all sessions. And really, before my session, I'm closing. I want to give you the voice to the Muges and Emma because of also, and also if as far as I want to say, if anyone from session one as well to conclude, but as their last sentences, please share. And before my session closing, I want to thank you all my panelists as well, all attenders, all sharings, and really 3 hours so far. It was amazing for me. Also, I learned from in general and in micro and macro based many things from you. It was very good experience for me. Really, I am very happy to share time with you all the guys and ladies here. So before just one I want to say thank you, special thank you to Minhaj University. All the background from all speakers you see from Minhaj University as well. And then as this live stream, and after the live stream, recorded stream, you can see fintechmotion.com and minhaj.tv. And especially thanks to the Minhaj speakers and Minhaj IT administration and leader of IT, Mr. Kram, thank you, and IT department for streaming and for this all Zoom infrastructure as well. Thanks to Minhaj University, Pakistan. Really, it was good from west to east. If you think that from west of Africa, as you can say, Ghana and Nigeria, and then in Africa, in Wall as well, and then Middle East, and then Pakistan and Pacific. Let's say Turkey as in the sum of center of this issue. Also, it was great, really, and in this fintech and technology, finance, and social side of really big issues. All of them affect each other, and with government and regulations and open banking going some business, and this business needs for people waiting for this technology make easy for many things, inshallah, after that more and more to reach unbanking people as well, with many other dynamics and alternative methods together with banks and institutions and governments as well. So thank you from my side, and as well as the moderator of the session too. It was a great chance for me to thank again. Then see you next events as well. Fintech Motion, we are Fintech CEO Club as well. We are trying to make connects fintech leaders in platforms. We are fintechmotion.com. You can see we have application for email groups every day. Some people apply us to be member of Fintech Motion and Fintech CEO Club, Fintech Club email group. Thank you, and thank you again, all speakers and attenders. I want to give last voices, if anyone rise and hands and make some last conclusion, and if possible that Mr. Kuram can say something because of as leader of the technical leader of all this details infrastructure to us, and Mugeswe from Oman, and Emma, Lady Emma from Australia, for closing the all session. If I want to give my sentences or my voice to them.
Great. Thank you so much, Mustafa, and thank you all the panelists. I guess to close, I would say, wow, we have touched on a lot today. We've looked at economic empowerment as a prime target of social and philanthropy finance. We've also looked at the exciting technology social finance platform that Dr. Hussein and his team at Minhaj University will be using to target economic empowerment by synergizing with a number of international teams and experts. So as a young woman, I feel like we have a lot to do. As our world becomes more interconnected, we need to find better solutions that will include everyone in today's opportunities. At GDA Corporation, where I work day and night, we are extremely lucky and proud to bring fintech innovation into the banking and finance industry. I work with the Dubai government on a number of projects, and our main focus is around building a new financial infrastructure using technologies like decentralized finance, legalizing smart contracts for fintech compliance, and also building regulatory sandbox and frameworks for new fintech products. So to touch on a broader theme that has been addressed throughout the event, there is a need for a strong industry code of conduct and for there to be some accountability amongst financial players to hold themselves to a standard where they are legally liable if they are not acting in the customer's best interest. I think that these unprecedented times have called for a huge need. And when there is a huge need, there is an opportunity and a call for disruption. Disruptors, innovators, technologists, finding ways to deliver new products in different ways that are cheaper and simpler. This is what entrepreneurs are doing all over the world. I think that COVID has really shown us the risk of thinking in an incremental way in a world that can be very easily disrupted. So I want to encourage everyone to really think about the way that the banking and financial industry is headed, and to really think about how you can make a successful business while still making a big change and doing good to this world. So I'd like to thank Minhaj University for hosting this event. I'd like to thank Muhiz, and I'd like to thank all our other speakers and panelists. It's been a great session, and I hope audience members, you've been able to take something out of it. Thank you very much.
Thank you very much. Just last concluding sentence on the behalf of Minhaj University Lahore. I'm really very much thankful to all of the panelists, all of the speakers, and Emma for hosting this event, for moderating this event, the whole one, and specifically to dear Muhiz Shokir and then dear Mustafa from Turkey for moderating session 1 and session 2. I'm really enjoying the working with you people, typically globally working with all the people having the interest in the social finance and Islamic finance and all that. And on my behalf of Minhaj University Lahore, I'm really thankful to you all to support this cause. Thank you very much.
Thank you very much, everybody.
Thank you, dear Muhiz. Thank you. Assalamu alaikum.
Thank you. Wa alaikum salam.
Thank you, everyone.
Thank you,
See you next.
Thank you.
See you again.
See you next again.
Okay.
Hey, wala Emra. Hey, wala Mustafa.
Shukran, everybody. Thank you. Salam alaikum.
Wa alaikum salam.
It is your time to find your place in the world. Minhaj University recognizes your potential. Extensive libraries and resources broaden intellectual horizons. Job placement, scholarships are at the heart of affordable education. Prize-winning faculty mentor every step of your way. We groom champions. Minhaj University, where dreams come true. We can take you there. Admissions open.